Hi, this is Ken Brownlee with the Brownlee Group, Keller Williams. Just wanted to touch base with you. As you know, when you buy a home, a lot of buyers just assume they're going to just get in their car and go look or call an agent and find out what's going on. There's a lot of prep work that needs to happen, and some of the prep work is talking to a lender. And before you talk to a lender, or when you do talk to a lender, you want to find out, what is my payment, where I need to go. And Mark with Guaranteed Rate is here. He's going to talk to us about VA loans. Thank you for being with us.
Thank you for having me.
We're going to talk about VA loans. The Veterans Administration has loans specifically for certain folks, and I hope you can cover that. And before we do, just make sure you like our page and follow us on Facebook and YouTube and Instagram. Mark, just introduce yourself a little bit if you would, please.
Oh, absolutely. Well, my name is Mark Zimmer with Guaranteed Rate Affinity. I'm an originating manager. We offer a team of people that help put these loans together. Yeah. And we're here to support and provide any kind of loan options for any borrowers that qualify. So I know we're talking about VA, but we offer a suite of products, anywhere from zero down to any conventional products, 20+% down, whatever the customer might require or need at the time.
Okay. Well, a lot of people, because we have McDill here, they come in and they always have a VA or they're thinking about a VA. So some of these questions I get a lot, so hopefully you can answer them. And then we can maybe at another time, tons of loans out there that we can cover those as well. Sound good?
Absolutely.
Perfect. On a VA loan, who can actually qualify for those?
Well, basically anybody who's service, active duty, they could be selected reserve, retired, or even some spouses, widowed spouses from their husband or spouse that have died from military connected disability. They're eligible for a VA loan. Mm-hmm. They're a great product because they do allow for zero down options for most borrowers, and it's certainly a great program to allow borrowers with little money down to get in with little to no payment.
All right, and then what is it? They call it entitlement. Like they're only allowed to get so many, or is it a one-time deal? You get one VA loan for the rest of their life?
Well, they have basic entitlement, which is $36,000. It's like an insurance policy. So there's a mathematical equation they use. $36,000 is actually 25%, and on a regular basic basic entitlement loan, that would be equivalent to $144,000. Now, that doesn't mean that they're only qualified up to $144,000 with zero down. They can actually use some bonus entitlement as well, up to the conforming loan limit of the county that we might be in. So for our county, it would be $548,250. But with the new recent changes with VA financing, if nobody has any entitlement used, they can actually purchase up to any amount they want with zero down. That could be $2 million. Which is huge because that's changed since this last year.
Can they do anything to change their entitlement or how much they can borrow? Is there something they can do outside?
Well, generally, if somebody already has an existing VA loan, in order to restore their entitlement, usually they have to sell the property, or they would have to refinance the property out of a VA loan into like maybe a conventional product. But certainly if somebody is willing to keep within their means of buying a second property, we can determine how much entitlement they have left, and then we can find out what they could purchase again with zero down. If they find something that's, let's say, could be potentially $100,000 more, then they basically can pay the difference of 25%, which would be equivalent to $25,000, and VA will still insure that product.
I was never in the military, so I guess my question is when they're getting a loan, and why would they want to get a VA loan? Is it just a specialty? I know no money down, but is it a lower interest rate? Tell me the benefits as opposed to going conventional or USDA. Perfect. And I don't want to carry all those products, but why would you want to go to VA?
That's a great question. So first off, the VA loans offer better interest rates. So lower interest rates, they don't carry any monthly mortgage insurance premium. They do pay a funding fee. For anybody that's unlucky or not lucky to have a service-connected disability, they could be waived. So the funding fee is normally, for someone that haven't used it before, it's 2.3% of the loan amount, but that's something that can be rolled into the loan, so it's not anything that the buyer has to bring to the table. And certainly if they've used it before, then it would go to 3.6%. But oftentimes, if somebody's willing to bring some money to the table regardless, they can actually get a reduction on the funding fee, which makes it attractive. But for someone that's actually has some kind of service-connected disability, it really can't beat the program because they have zero down, no mortgage insurance, no funding fee. It's really the best product you can get. And if they offered it, it would be available to everybody if it wasn't the best program, in my opinion.
Okay, but you brought up something that I almost wanted to stop you instantly.
sorry.
Yeah, no, you brought up mortgage insurance. They have to buy mortgage insurance on their house, is what sometimes customers tell me. But in reality, mortgage insurance is just protecting the bank.
Right. Well, in this case with the VA, they just charge what's called a funding fee, which is the same thing as, you can call it mortgage insurance. But for some that are disabled or have any service-connected disability, that's completely waived for them.
Oh, is it?
But there is no monthly mortgage insurance premium they ever have to pay. So it's one and done, and it's rolled into the loan, and obviously it helps the borrower eliminate that additional funds they would need to bring to the table.
Okay. So again, what is the fee? What fees? I mean, there's certain things that the buyer has to pay for, and there's some things that they're not allowed to pay for.
Well,
Correct.
generally with this, in this market now, a lot of lenders, because you can't charge origination fees, or in the sense where if you broke it down as individual line items like doc prep fees, processing fees, underwriting fees, the VA will not allow you to pay those. But the underwriters now have just learned to charge a flat lender fee, or a flat, I guess we could just call it a lender fee, so that you can kind of avoid from hitting those hard stops with the VA as far as being able to pay for those certain items.
Okay. So I have a VA customer. I know he's military, but how do I send him to find out what his entitlement is, or what his benefit is?
We can actually, as lenders, we can do that for the borrower. So there's a system, we provide some basic information, and it's online, it's automated, and we can get that from them or for them in minutes. If the borrower is willing to provide the information themselves, there is a VA office right here in St. Petersburg that they can call and contact and get the information themselves. But from a customer service point of view, we will handle that for them, no problem.
Perfect. And then what about the home inspection? I know from past experience, VAs were pretty tough on the house. And I say tough on the house just because as a listing, sometimes a listing agent did not really want to deal with a VA loan because of the quality of the home. Can you give us a little bit of an idea of what's changed?
Sure. Well, every property has minimum property standards, so we want to make sure the VA is providing, a safe investment for the veteran. They're not as strict as they used to be years ago. Now, I mean, things as simple as peeling paint is no longer an issue for the appraiser. Appraisers are generally now, they understand the markets a little bit better, or a lot better, and they're not as critical on certain items. And certainly if we talk about any other product, whether it be FHA or conventional financing, any major issue with the property would be a red flag, such as a hole in the roof.
Yeah, well, I totally agree, because all loans have to have a solid home and has to be livable. I know in the past, this was years and years ago, like gutters had to be in a certain point, or a fixture had to be fixed if it was found out. That is in the past. Like you mentioned, the chip paint, or what do you call it? Sheetrock might have a little bit of a damage or something.
Yeah, generally nowadays, the VA office, the appraisers now they're not out to nitpick the houses anymore like they used to. They actually just truly want to help the veteran the best way possible and make sure that the deals could go through.
Fantastic. Well, I would love to have you back. He's my go-to guy. You'll love everything he'll do for you. Catch you off guard for a little bit. I'm going to mention types of loans, and you can just say yes or no if you do them.
Sure.
Conventional?
Yes.
VA, we know.
Yes.
What about FHA?
Yes.
USDA?
Yes.
Construction or construction perm?
Sort of, yes.
Perfect. All right, but we can always cover those topics, and you can address, and you can send them in whatever direction you need with the customer. Feel free to give us a call. Definitely reach out to Mark and Guaranteed Rate, and he'll be glad to work with you. And thank you for following. And again, if you have any questions, let us know, and we'll try to cover them in the next video. Appreciate it.